Ladies and gentlemen, on behalf of Captify Consulting Investor Relations team, I welcome you all to the Q2 and H1 FY26 post-earnings conference call of Royal Orchid Hotels Limited. Today on the call from the management team we have with us Mr. Chandar Balji, Chairman and Managing Director, Mr. Arjun Balji, President, Mr. Keshav Balji, Non-Executive Director, and Mr. Amit Jaiswal, Chief Financial Officer. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to brief us about the business and performance highlights for the period ended September 2025, their growth plan and vision for the coming years, post which we will open the floor for Q&A. Over to the management team.
Good evening, dear friends, partners, and members of our investment community. As someone who has spent a lifetime building this industry, I've learned that the real measure of progress is just not in numbers, but in the confidence with which you walk into the future. A few days ago, standing in the lobby of Iconica, Mumbai, and watching our first guest walk in, I felt this confidence very strongly. Just months ago, Iconica Mumbai was a shell. Today it stands as a 292-key lifestyle landmark at Mumbai's T2 airport. Delivered ahead of time, within an unprecedented budget, and designed to set new benchmarks for our brand. That moment reminded me that Royal Orchid Hotels is entering a new era. We are not simplifying, expanding. We are evolving with greater clarity, sharper execution, and stronger market position. We are stepping into a space where speed, discipline, and an asset-light scale are working in perfect alignment. Performance overview. Growth built on discipline. Let me take you through our performance for Q2 FY26. Consolidated revenues rose to 86.8 crores, up 10.7% Y-on-Y. EBITDA stood at 20.8 crores, reflecting 7% Y-on-Y growth. Net profit after associates for quarter was 4.3 crores. For H1 FY26, consolidated revenue grew 8.7% to 169.6 crores. EBITDA increased 9% to 44.5 crores. Cash profit improved to 28.4 crores. These results reflect steady, dependable growth supported by 18% Y-on-Y increase in room revenue, 34% in other services. Consistent performance across managed and revenue share hotels. While Q2 includes a one-time Ind AS impact due to commissioning of Iconica Mumbai, the underlying business remains strong, diversified, and resilient. Exactly what long-term investors look for. Portfolio strength. A foundation of scale and stability. This quarter, we strengthened our portfolio with 3 new openings: Iconica Mumbai, Regenta Central Solapur, Regenta Resort Tropical Village Mysore. Together, they added 388 keys to our system. Today, Royal Orchid Hotel stands at 119 plus operational hotels, 7,437 operational rooms, and 9,989 total keys, including signed properties. At a presence across 80 cities in India and abroad. This scale gives us balanced exposure, stronger market presence, and diversified demand challenges, reinforcing our position in the hospitality landscape. Execution excellent, the core of our market advantage. Iconica Mumbai, not just a hotel opening, is a proof of point of execution discipline that defines us. A 29 to 292 key lifestyle hotel delivered in record time, built with sharp cost and design excellence, operationally ready from day one. This is a template for the next decade for Royal Orchid Hotels. Sharper execution, sharper brand segmentation, strong ROC principle, purposeful expansion across Zenta Z, Place, Crestoria, and Iconica. We are scaling not by adding assets, but by strengthening our capabilities, technology, design-led operational excellence. Vision 2030, clear, ambitious, and backed by capabilities. Our North Star remains focused and ambitious to triple our portfolio from 119 plus to 345 hotels by 2030 and expand our 22,000 plus keys. This will be powered by a clear brand architecture, a disciplined asset-light model, extensive use of technology and AI across operations. Regenta Rewards evolved with a strong unified loyalty engine, rising mobility, domestic travel, strong leisure demand, and expanding corporate mobility. We are building a hospitality ecosystem that blends Indian warmth with global efficiency, greater intelligence, seamless, delightful experience for every guest. A future of scalable, sustainable, and high confidence growth. We are prepared for the next phase of our journey. We do this with a disciplined balance sheet, a robust pipeline of hotels across key markets, strengthening brand loyalty, and execution engine that consistently delivers ahead of expectation. We're not just adding room, we're building a legacy of service, opportunity, and long-term value creation. With growing demand, expanding footprints, rising profitability, and a steadfast execution, I can say with conviction, Royal Orchid has the foundation, the resolution, and the momentum to deliver strong, sustained growth. To all our investors and partners, thank you for your trust, your belief, and your continued support. The future of Royal Orchid is bright, ambitious, and firmly in motion. Thank you.
Thank you, sir. Arjun, would you like to add something on Iconica and the progress of it and how things are today?
Sure. Thank you, everyone. For all of those who have not seen Iconica, we'd love for you to come and have a look at what we've built. Your company built this hotel from shell to completion in 11 months or under a year, which is unprecedented. We're very fortunate to have received great reviews, uh, which are now on TripAdvisor, which the influencers across social channels have consistently spoken about our food and beverage offerings. And I think over the next couple of months, you'll see the hotel track exactly what we've stated earlier, which is in the 70% occupancy with in and around the 8,000 ARR mark. And we're well on our way to doing that. This is as of today, we are ranked number 3 out of the Mumbai hotels. So for a hotel to be open for a little under 2 months and to already be ranked number 3, we are very, very proud of this. And you can see the reviews and see what we're doing right. And it's just onwards and upwards from here. Thank you.
Thank you, Arjun. All those who wish to ask a question may use the option of raise hand and we'll invite you to ask a question. In case there's a problem at your end, you can put the message in chat. We'll take the first question from Rahul. Rahul, you can go ahead.
Thank you for taking my question, sirs. Congratulations on getting that the Iconica up and running in such a short period of time. I have had the pleasure of visiting the place. It's a fabulous place. Sir, just to get a clear sense, if you could just give us a sense on the numbers of Iconica. I know it's only a month in this thing, but it has a disproportionate impact on the quarterly numbers of the base business that we were doing, which is ex Iconica. Just a sense on what are the numbers of Iconica for this quarter. I'm assuming there would be a loss. So it would be of great help to kind of analyze the base business as well. Thank you so
So,
much.
so Rahul, as you know, we started the hotel in the, towards the end of September. However, we have, the operational pre-opening loss we had to book of around 2 crores. And of course, the Ind AS adjustment of 6.35 crore, which I have highlighted in my presentation.
So essentially, sir, we are talking operational loss, whatever turnover you may have recognized, little turnover
Yeah,
you may have recognized,
yeah.
and the OPEX itself, that is about a 2 crore loss that you have booked in
Yes,
Q2.
yes.
And then
Basically,
obviously you had
pre-operating expenses which we could not capitalize has to be written off in the book. So that loss
written off in.
has come as 2 crore rupees, and 6.35 crore we have highlighted in our presentation. That is the Ind AS adjustment of, because of it's a 25-year lease. So that needs
Sure.
to be done. So it's that.
What would be the quarterly run rates here, sir? 6.35 is proportionate for the quarter. What would be the a full quarter run rate of this Ind AS number?
See, this was half year. So in next half year also around 8 to 9 crores will come. Ind AS.
6.35 was for the half year.
Yes, yes. So
And
the total for the year, it is coming around 15 crores. So around 8.5 something will
crores.
come in next 2 quarters. Yeah, depending on the operations and all. That's how the calculation happens.
weren't we, sir, talking about a 36 CR kind of rent number? So that
Yes,
gets distributed because of the Ind AS like this, a 15 crore number?
15 crore plus 36 it will come. So that's how it goes.
Acha, okay. Yeah, I thought the rent becomes the lease liability and the ROU part, and then that gets running through in the form of interest and depreciation.
You are right,
That's
Rahul, but what happens, it goes up because of the initial years. So it gets averaged out over 25 years. So the
correct, correct, correct.
initially the India's adjustment will be more, and slowly it will taper down.
Okay. And so just a question on how has Arjun has already indicated that we are on track to kind of move towards our targets of occupancies and all. How has October, November kind of trended?
So it is good. See, initially we had given an indication of 75 crores because we were targeting to open it in the month of July. But since it has got delayed by almost 2.5 months, so we are looking at somewhere around 50 odd crores for the year revenues.
Over Q3 and Q4, 50 odd crores.
Yes, yes.
Right, right, sir. Thank you very much for answering those questions. Thank you.
Anybody else who wishes to ask a question may please use the option of raise hand. Rahul, you can come back again.
Yeah, since I thought I'll just come back in the queue. And sir, if you could help us with this quarter's cost structure, whatever you have reported, what is likely, how much of it is kind of built in and cooked into the numbers? How much of Iconica cost is cooked into the numbers here in
So
the quarter?
roughly, almost 5 crores have been cooked in.
And what do you expect the OPEX number to be, sir, for Iconica on a monthly basis? 5 crores is a good guess there.
On a monthly basis, somewhere around 4.5 crores it will be there.
4.5 crores of OPEX. And this quarter you had booked 5.
Right, yeah.
Right, right. Okay, okay. I'll come back. Thank you.
So there's one question in the chat. With the success of Iconica, can you throw some more light on further plans with Iconica and from the Crestoria brand?
Mr. Balji?
Yeah, you see, if you see the hierarchy of the Iconica is a five-star top-class hotel. So that will be, of course, expansion will be slow because we are not franchising that. And if we get a management or lease, yes, we will take it. So that will be slow because there's a heavy investment involved also. But as far as Crestoria is concerned, it's a non-standardized kind of a product, but catering to a very boutique, upmarket hotels. So we are already working towards two Crestoria hotels, which should open very shortly. And then, of course, our bread and butter, that is your Regenta and Regenta Place, two brands which are rapidly expanding. We have 38 hotels which are already signed up, and out of which only about two are Crestoria. But others, expansion is going on very rapidly, and we want to continue that in the mid-market space. And of course, the biggest growth, if we just started, will come from Regenta Z, which is a franchise model where we'll provide all the technical know-how to set up the hotel, and we will train the general manager and the HODs very, operationally also very light, minimum service hotels, which will be like neighborhood hotels, the range of 40 to 50 rooms or 40 to 60 rooms hotels, which will be the most rapid expansion. So I think this is what our growth path is in the near future.
So we take the next question from Priyank. Priyank, you can go ahead.
Yeah, thanks for the opportunity, sir. Sir, my first question is on the employee expenses. So this quarter we recorded around 25 CR of employee expenses. So what could be the quarterly run rate going forward, uh, uh, considering there is a sharp increase over the previous numbers?
So this year, of course, there's been a boom in the hospitality industry, and a large number of hotels are opening. So we are definitely having a pressure for people who are poaching our staff, well-trained staff. So we have to give some extraordinary increase, but that is not going to last for too long. Because we are taking other measures also, like trainees, on-the-job trainees from the hotel colleges. We are getting a lot of apprentices who are joining us. We are also taking some contract staff, which we had stopped earlier. So we are taking those measures. And of course, we have done our management development program where we are trying to churn up as many in-house general managers as we can. Although the number is very large, we may not be able to do all, but we are that will give us more reliable, trained in our brand standards, general managers and HODs for the future. So that is going on. We beefed up our HR and training department, and that's going on very aggressively to, if not reduce, at least maintain the percentage of cost. So a lot of changes which we have done will boost our revenues. Therefore, our percentage of employee costs to the revenue will either come down or remain the same.
Adding to what Mr. Balji said, Priyank, let me tell you, this 25 crore includes almost 3 crores of employee cost of Iconica Mumbai, which has yet to give the full-fledged start. That
Okay,
is why it
so
is
this,
looking. That is why it is looking on the higher side in
yeah,
comparison to
yeah,
the
yeah,
revenue.
that is understood, sir. So 25 CR would be new normal going forward
Yeah,
in absolute amount.
roughly around 25 to 25 and a half would be the new
Okay.
normal. Yeah.
Okay, understood. Now, sir, on the rent side, so I noted that in cash flow statement we have booked 18 CR kind of rent
Yes.
for the half year.
Yes.
However, the pre-Ind AS number for the rent in our investor presentation comes around 11 CR. So why this difference is there?
That's what I told you. No, the India's adjustment of 6.35 has of Iconica has hit the PNL.
No, so the lease liability payment of 18 CR for this half year. So how much would be for the second half?
Second half will be
Second half is 18 CR to be booked and minus the India's adjustment or plus the India's adjustment.
plus the India citizens.
Yes. The first half you had said is 18 come down to 11. That's because we had booked it earlier thinking the hotel would start 3 months and it actually did.
No, Mr. Arjun Baji, let me correct it. See,
Yeah.
as far as the rent liability pre-Indias is concerned of Iconica, there is no rent liability. Pre-Indias, there is no rent liability of Iconica which is being booked.
No, that's correct. So the pre-Ind AS number versus the post-Ind AS number of for the EBITDA, there is a differential of 11 CR, right?
Yes.
Yeah. So that should be the rent.
Yeah. Yes.
Now the cash flow statement, we are seeing the rent of 18 CR.
Yes.
Yeah. So my question is particularly that only. Then why that difference is there?
One
So
second, I just tell you.
yeah.
See, as far as the cash flow is concerned, cash flow we add to the net profit the depreciation and finance cost. Okay. When
No,
we
so
calculate the
sorry for interrupting you.
yes.
I am looking at the cash flow from the financing activity,
Huh.
the interest and the principal portion for the lease.
Huh.
So if I am totaling that, that is coming around 18 CR.
Okay.
So my rent outflow for the first half of the year is 18 CR.
Yes.
Okay. And now for the index versus pre-index versus the post-index EBITDA number, the differential which is attributable to the rent, it is around 11 CR.
So rent expense we have taken 5.7 for the quarter. You are
For
looking
the
at the half year, right?
yes, for the quarter it is 5.4 CR.
11.1 we have taken.
And for the
Now,
half.
now the 6 crore has been plugged in into depreciation and finance cost.
Understood. That is understood. So for the
11 crore is without the Iconica rent.
yeah, so the Iconica rent has not been factored in.
No, that's what I told you. It's Iconica rent has been, there's no rent which has accrued on Iconica Hotel. It will start accruing only from 15th of November.
Okay, so we have paid some rent in advance. That's what we are trying to say.
No. We have not paid in rent in advance. We have done the adjustment of India's adjustment for the entire period of 25 crores and discounted it for this period and booked as 6.35 in depreciation and finance cost towards that rent.
Okay, and for the second half, how much rent we are expecting in terms of cash flow?
Cash flow, as far as the cash flow is concerned, in the second half means from October to March, we will be incurring around 12, 13 crores of rent.
Okay, understood. Perfect. Yeah, thank you, sir. Okay, that's it from my side. Thank you.
Thanks.
Thanks, Priyank. We'll take the next question from Prashant Kanavia. Prashant, please go ahead.
Yeah, can you hear me?
Yes,
Yes.
Prashant.
Yeah. First of all, I would like to congratulate you on the opening of Iconica. The pictures look really amazing on TripAdvisor, and the reviews do as well. And 11 months is an amazing time to open it. And my question is perhaps to Arjun. Um, In terms of, I know you guys are focused on, return on capital,
Right.
and I would love to understand the framework you have for an asset like Iconica, which is a leased asset. How you guys think in terms of return on capital for an investment like that. As the company, uh, I guess we want to scale up a few more Iconicas in the future. Would love to understand your framework on this.
Sure. Thanks for the question, Prashant. And we'd love to see you at the hotel for you to experience it firsthand rather than just through TripAdvisor. But when we decided that we'd focus a company like a private equity shop and figure out how do those guys look at a return on capital, right? And everything, while it is Excel, you're looking at a very data-driven theory on where you would deploy your money. Okay, so things like STR reports, things like what's happening in the market, is there going to be absorption of commercial spaces, so on and so forth. You look at all that data to figure out demand. Now, it's not accurate. Okay, it can never be accurate. But given the experience we have and given what is happening in the market, it gives you some dipstick understanding of if you were to do a hotel positioned in let's say it's upper mid scale or in the upscale lifestyle like we were talking about, or like Iconica is. If you were to do an upscale lifestyle hotel, what is the industry benchmark of what it would cost? Okay, so there are rule of thumbs and those numbers are available out in the public domain. So the way we think about it is that, if a chair costs 20,000 rupees, can we get that chair done for 8,500? Those are fundamental value engineering things that we look at in order to help reduce our input cost into the project to begin with. Okay, you know your end goal, you know where the market is. I mean, it'll be foolish of us to say we can, come in here and invest and outperform the Fairmonts of the world. I mean, it's foolish, right? So you have to be you need to first create what is the target segment you want to go after, what returns and yields that target segment generates, then what is the sort of return metric and profile you want to create, therefore determine what sort of cost you want to incur, and take it from there. So it's, there's a bottom-up approach and a top-down approach that one looks at from a investment of this scale. And this is large scale for us, right?
Yeah. That makes sense. But I guess in terms of, uh, is there a particular number you guys want to target, like after the hotel stabilizes, in
Yes.
terms of yield on the asset? Um, yeah.
Well, listen, asset yield is a very different metric. So let's look at around us. We're looking at the ROC metric, which we said, listen, 25% return on capital is kind of what we really want our portfolio to perform at. And that would be great. Now, from comparison perspective, our competitors own their assets. Therefore, they have huge interest and repayment and huge amounts of capex upfront. We in turn have lease rent, so there is an asset liability per se on for both people. So we're just looking at, how does one uh, uh, you know earn a return on that dollar invested in quicker, right, from a cash basis, because you guys at the investors value us on the cash basis, right, and not really the NAV of the asset. That was really our thesis.
Thank you.
Pleasure.
Anybody else who wishes to ask a question, please raise your hand.
Oh, we see
We'll
some
take,
hands up.
yeah, we'll take the next question from Chirag. Chirag, you can go ahead.
Thanks for the opportunity. First question on the Iconica expense that we reported in the quarter. So you said there's a 2 crore OPEX with regards to Iconica, and there is 3 crore employee expense. So 5 crore is the impact on the P&L for the quarter. Is that the right understanding?
Yes,
And what is okay? And what were the total revenues from
around
Iconica?
3 crores.
3 crores. Okay. And second question is on the rent. So you mentioned that there is no rent cash outflow
Yes.
in the quarter, and it will only start from 15th of November.
Yes.
So why is that? As in the hotel has started, right?
We had a rent-free period of 3 months from the date of getting the when the hotel is ready to operate.
Okay, okay, understood. Yeah, that would be it from my end. Thanks.
We'll take the next question from Anshuman. Anshuman, you can go ahead, please.
Yeah, hello, sir. Thank you for the opportunity. Uh, my first question is, what is the lower ARR in Q2 versus the last year Q2 and this year one, and similarly lower occupancy rates? Also, how does this equate with the net guest being higher? So domestic increased by 14,000 YOY, while foreign guest reduced 4,000 YOY.
So, Anshuman, let me tell you the ARR we have got 5,479 as against 5,114 for last year. Our occupancies were 67% as against 70% last year. And in our managed segment, we had an ADR of 3,552 as against 3,574 last year. Now, an occupancy of 54% as against 58%.
He's
Okay, so
asking why is it lower?
Why is it lower means, see, in generally second quarter when it rains, across the North India, the occupancies were quite low. In rains, and even Goa market also did not do that well in this year. Reasons of there are a lot of issues which is going on in the Goa market, the taxi issues and all. So that is why the occupancies got little bit hit. Whereas ADR, we have improved upon the ADR since last year.
yes, and my another question is that what has led to higher payroll cost, YOY and QOQ?
See, as we explained, the payroll cost includes the 3 months, pre-opening payroll cost of Iconica of around 3 crores. That is why you are seeing a surge in the payroll cost, whereas the revenues have started coming only mid September. That is why the payroll cost looks little higher for Iconica.
Okay, and my last question is that where are we on the modernization in our Goa and Bangalore hotels?
Mr. Valju, would you like to
Yes.
take this?
Yes, in Goa Hotel, we are actively pursuing it, but there is a issue of change of land use where certain parties had gone to the court to stop the smooth conversion of land. But I'm told that the thing should be through very shortly. So once the land use issue is settled, plans are ready, then we will get the plan sanctioned. And we hope that, but right now we don't want to do anything right now, any case, because it's the season. So we hope to start the work sometimes in the month of April when there is low season as far as this is. As far as the other hotels are concerned, we have just completed our 28 rooms, 28 wooden cottages in the resort in Bangalore. So that has been done and it's come out very well. Received also very well. Just about less than a month ago, we started that. It gives a very Bali-like ambience in the whole place. The inventory from 54 has gone to 82 rooms, and we hope to increase the revenue by about at least 70 to 80% of the room revenue. We are taking up the dhaba renovation and the banquet hall renovation very shortly. The plans are getting ready, tenders are being invited. That work is going on. We have out of the 50 rooms which were to be renovated in Royal Orchid Hotel, up to 37 rooms were already renovated. The balance 13 rooms, we have just kept it hold till the month of March. And March we'll start. Everything is ready. So I think once we start in 2 months' time, April and May, we hope to finish those renovations. We are also now planning to renovate our central hotel, that is Manipal Center on MG Road. which is a 130 room 4-star hotel. There we have just invited a few architects to give us some plans. So I think in about 3 to 6 months plan should be ready, and then we'll take up that renovation also. So this is what
Okay.
our main renovation and expansion plan is.
Okay, thank you, sir. Thank you for the opportunity.
Thank you. We'll take the next question from Yash Dantewadia. Yash, you can go ahead, please.
Yeah, hi. I'm sorry if this is repetitive and I missed the first half of the con call. Really sorry for that. My question is regarding this Iconica hotel. Just wanted to understand. I've seen online for a lot of days it's already sold out. I think even on this weekend for Fridays, I think it's showing sold out. So the 100 crore number on this hotel, how far do you see it? Annual number. I'm talking about FNB included. Is 100 crore a right estimate, or are you expecting more or less?
Next year we are targeting because we have started in the mid of September. So this year definitely 100 crore is not possible, but next year we will definitely cross 100 crores.
Right. And as far as your four-star hotel in Bangalore that's there, and you were talking about renovations, could you approximately give us some cost guidance on that? And renovation room by room hoga? Yeah, are you going to close down the hotel?
No,
No,
we're not going to close down the hotel. That's something I can tell you. We are very prudent that way. Even with our main flagship, the Royal Orchid in Bangalore, we closed down floor by floor. So the Royal Orchid Central, Manipal Center will go under the knife in a phased manner, perhaps a floor at a time, and but we will not close the hotel down.
Yeah, but could you give us some sort of guidance on the cost? A range would work.
Uh, I think a little premature. As Mr. Balji said, we're in the middle of just finalizing the plan of how to go about it and then where to position it. And earlier we had stated that once you position the hotel with the right use of the right return profile for the asset, then we'll figure out the investment, then we'll figure out how to go about this. So just I think we're a couple of weeks away from actually giving those numbers or
No, that's
estimating.
fine, but are we trying to convert? So I know Bangalore, I'm from Bangalore.
Lovely.
So it's a very premium area, right? MG Road. My
Yes.
question is, are you trying to convert that into a five-star hotel by any chance? Are we going to see a renovation of that scale, or is going to remain a four-star hotel?
4-star hotel, but we'll upgrade it.
Okay. And my next question is, are we going to see any more hotels coming under the lease contract this year, like the Iconica in Mumbai? Do you have anything more on that scale um, under under discussions of any sort?
So listen, discussions is one, but what on the uh, upcoming hotels, on the 38 hotels that we've listed out, there are 5 hotels under the revenue share model that we are currently working towards executing. There is the Regenta, which is a 120 key hotel in Gurgaon, Sector 20. Lucknow is a 172 room hotel, a large property. And then we've got the North Goa asset in Doda Marg, again under Regenta Resort. We have a small Crestoria, the first of its kind. It's going to be really, really boutique, lovely, under revenue share as well.
How many rooms is that? The last one?
Crestoria is about 40 keys,
Okay,
but it's
okay.
upscale. It's very upscale, and it'll it'll be a really nice hotel, experiential. And
Right.
we've got a fifth one, yeah.
Right. All in all, what are we guiding for next year? Next financial year?
we have given the guideline in our presentation if you really look at it.
At,
Okay, for
at the,
next 2 years we have given, and I think we should be there.
we're at the 450 mark.
Yes.
Right, right. And are we confident of this number?
Yes.
Yes, yes,
Right, right. Thank you. I'll just come in queue.
sure. Thank you.
Thank you. We'll take the next question from Aishwarya. Aishwarya, please go ahead.
Thank you. Good evening. I have two questions. First one is, could you throw some light on the role being played by senior management teams between them on strategy, new hotel openings, negotiations, etc.?
Mr. Balji.
Yes, you see, all new projects are now discussed almost on a weekly basis with the development team and the cluster heads. Cluster heads are also involved in evaluating the project. The development team brings the project, evaluates it, brings to the cluster heads, and then we have a joint Zoom call or so to say yes or no, and or maybe seek some more information about the market, either the market. So many hotels we turned down because the market is not, hotel may be good, the owners may have very ambitious plans, but the market may not be that strong or stable. So some hotels we turn down, some hotels we go into deeper details and get more information. But all this has to be done very confidentially and very fast, because otherwise, information can leak to the market. But today, owners are also very smart. They engage a consultant who lines up most of the various chains. So we have to really show that how we are really actually performing and against the competition, against the competition chains. So we have to show that in a lot of markets we are performing better. Some we are not performing that good. So there the focus is on now sales and marketing. We've engaged new professionals in sales and marketing, and their focus is to look at all the hotels which are not doing, are not in the one or two positions in the market. How are they? So we're trying to push that also. So a lot of work has gone in, and we are trying to get AI also into action to improve our one is efficiency, could reduce costs, and increase sales and profitability.
Right. My next question is, we have recently seen Indian hotels acquiring something on the wellness side. So, any plans that you will have on similar lines to acquire any allied businesses or any other hotels or smaller chains or something on the food and beverage side?
Now, we are looking at acquisitions, but obviously, acquisition has got to do with something with how much deep pockets you have. And Indian Hotel does have much deeper pockets with Tata backing also. But this is something which is definitely being explored by us, and so that will bump up our development rather than going organically by one, two hotels. If we need a little bump, so we are exploring. I can't tell you what we're exploring, but we are definitely exploring that. Maybe a little smaller, weaker chains, which we are trying to see whether we can have a strategic tie-up with them.
Got it. Thank you and wish you all the best.
Thanks.
Thank you. Anybody else who wishes to ask a question may please raise hand. I have a question on chat from Kavina Desai. Can you provide some context on the F&B revenue trend going forward? And since it is down this quarter, where do you see it? And any guidance for EBITDA margins and debt for FY26-27?
So let me just take the F&B question. Over the last few months, we've had a strategic review of the F&B of our hotels to understand what restaurants work, what doesn't work, what food works or doesn't work. Obviously, the customer is rapidly changing. The customer demands and preferences are changing, and standalones are, eating the lunch of the mid-market hotel players. So in that light, we are in the middle of revamping and rolling out new F&B concepts along our managed hotel partners today. So in the next couple of months, the F&B will have, whether it's the menus refreshed, whether it's concept refreshed. So all of that is being done strategically as we speak. So rest assured, I think F&B contributes about 40% of revenue right now, and that number should remain stable and not go down.
Since there are no further questions, would you like to give any closing comments?
I'm really happy to see a lot of participations by the people and a lot of questions which we can think of for the next quarter and be prepared for better answers. Thank you very much for joining us, and we look forward to your continued support. And we can assure you from our side that we'll leave no stones unturned to make this company better and better quarter on quarter. Thank you.
Thank you, sir. And thank you to all the participants for joining on this call. Thank you to the management team. This brings us to end of today's conference call. Thank you.
Thanks,
Thank
Vinay.
you.
You.
Thanks, everyone.
Thanks, everyone. Thank you.